Nothing in this recording is intended as investment advice, and the people in this recording may hold positions in the companies they talk about. Do not make any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to Zak's Traders Cafe. Today I'm joined by Nadeem Raza, who's CEO, and Nick Wightman, who's CFO at Microlise. How are you today, gents?
Hi, Zak.
Hi, Zak.
Right, I've decided to interview you once more. I think I've interviewed you several times before, but every time I interview you, it seems to be that you're making progress. So maybe we can talk about that in the wake of your results for the year ended the 31st of December last year. So maybe you can go through that.
Sure. Well, I mean, Zak, firstly, thanks for having us. I think we've posted a good set of results. Revenue was up 13% to 71.7. We saw good growth in our recurring revenue as well, up 11% to 45 million. And just EBITDA grew 15% to 9.4 million. And again, with the backdrop that churn was still very low at 0.7%. And again, good cash generation. Following all of that, we also declared our maiden dividend of 1.725 pence per share, due to be paid on June the 28th, pending shareholder approval, of course, in our AGM in May.
I suppose if one's trying to be fussy or trying to go into the detail, the question is whether you're growing revenues by organic growth or through acquisitions, or both, and what the ratio is between the two.
So for 2023, these results are mainly all down to organic growth. There's about £400,000, I would suggest, right, Nick, I guess, of growth, which is related to the Vita acquisition that we did back in March. But the other two acquisitions that we did, obviously, KSafe completed in the middle of December, and the ESS acquisition completed post-period end in the middle of January. So neither of them have really any contribution to these numbers. So this is largely organic growth that you're seeing here.
And what was also exciting, which I noticed a couple of weeks back, was the contract win that you had, the 20 million Australian dollar contract win.
Yes, that was with Woolworths. It's one of our largest contract wins to date. And Woolworths is obviously the number one retailer in the Australian market. So that means that we now have the top three retailers in Australia as customers, and obviously on our way to replicating the success that we've had in the retail segment in the UK, where we have the top 15 retailers and a 90% market share. So we look forward to continuing on that journey in Australia and continuing to get to the same kind of levels over there that we have done in the UK.
I suppose the other point from that is that you talked about the low churn, and you've got these contract wins and that quite a sort of a strong grip on market share as well. It would seem that you're muscling out the competition as well. It seems to be sort of quite a barrier to entry there as well, in terms of any competitors you may have.
Yeah, I think what we get told by customers is the reason why they choose our products and services is really the breadth of the portfolio, the fact that we can supply so many different modules that cover so many of their functional requirements across their business, and that's really something that nobody else does. Lots of people provide solutions in particular functional areas, whether it's tracking or telematics, or in planning and optimization, or in compliance. They provide that, and that's it. Whereas we provide the whole breadth of that of that requirement, and that means that they can buy from one company. They get one support number to call if something goes wrong, and the product set all works together. They don't have to worry about integrating it.
I suppose the other point maybe from that, in terms of software, is that everybody's talking about AI these days. Is that playing a part in what you're doing?
Yeah, I mean, we don't, we haven't really been shouting off on the rooftops about the AI stuff that we do. We do use AI in a number of products already, and have been for quite some time. So our trailer brake performance monitoring system has been using machine learning for the last few years. It's incorporated and really is the core of that product. And obviously more recently, we've introduced AI vision systems in our cameras, particularly external cameras, for making sure that drivers aren't tailgating and that their lane keeping is up to standard, but also inward facing cameras monitoring driver fatigue and monitoring driver distraction to make sure they're wearing their seatbelt, they're not eating or drinking or smoking or on their phone or anything like that. So those tools have been in our product set for quite some time. So AI is a core part of a number of different products that we have on the market.
But is it just a natural development of what's been going on before, rather than as a sort of a new particular thing which has come into your product suite?
So far, yes. I mean, we're continuing to develop new things, and there are some interesting innovations going on internally in our R&D areas regarding AI with a lot of the other data that we have. We have huge amounts of data that we collect as part of the way that the product works, and there are other AI related benefits and value propositions that we think we can bring to market, and so you'll see more of those later on in the year.
A question for Nick, given that he's probably got his hands on the bank accounts, etc. You've decided to come up with your or deliver your maiden final dividend. What goes on in your mind in terms of pressing the button on that? When do you feel it's safe to give some cash back to shareholders, and when is it not safe?
Well, I mean, obviously, from the dividend point of view, we've always said that we would become a dividend-paying stock at some point when we initially IPO back in 2021. We've made a number of acquisitions over the course of, well, certainly over the last year, and we have recently renewed our banking facility. So with all these acquisitions that we have made, we haven't touched any of the facility. So we're completely debt free from that perspective. I think in terms of the decision, I think it was fairly easy to make, really, in the respect that it's a relatively modest dividend. We have got plenty of cash available from cash that will generate from general operating activities to be able to afford to do it. So and we can continue to invest in all of the things that we want to, in terms of investing in organic growth. We'll have a significant amount of firepower still, should we embark on further M&A opportunities that we do have a pipeline that are actively working on that. So it was a fairly easy decision that we could afford to do it quite comfortably, and like I said, it's a relatively modest dividend as well.
And just finally for Nadeem, we've talked about the mix between organic and acquisition. What are the drivers that you see going forward in terms of the company? Is it from organic, or is it from acquisition, or just a big contracts landing on your plate?
Well, all three of those. To be honest, I mean, we have some really large contracts in our pipeline for sales. So there are some new opportunities out there which are significant, and we're looking forward to try and close those in the coming months. Organic growth is still good. We have an existing order book that we are in the process of delivering. Some of those are contracts that we won towards the tail end of 2023 that we're in the process of delivering out in 2024. Woolworths in particularly, we only closed that fairly recently, and so that will be rolled out and contribute to our numbers in 2024. And then there is M&A activity that we are continuing to look at. So we expect there to be further M&A, and that also to accelerate the growth as well.
And you have the capacity to cope with all this flood of business.
Yeah, we do. We're obviously very conscious of not biting off more than we can chew. We are integrating the businesses that we acquired last year. Two of them have been pretty much completed in terms of integration. The ESS one that we completed in January will probably take a bit longer, it being the largest acquisition that we've done to date. So that will take a little while longer to integrate, but that again doesn't stop us looking at other M&A opportunities going forwards.
Nadeem Raza and Nick Wightman from Microlise, thank you very much indeed, and congratulations on the latest results.
Thank you,
Thanks,
Zak.
Zak.